Okay, let's get ready for today's financial accounting. Just a little bit of announcement for next semester. Okay, very soon for next semester, starting in September. I'm going to offer two courses. I will offer two courses. One is business law, okay, and this is a book. And I will send. Eventually, I send the image to the office, so you can ask the office, or I can send the email. So try to get the book as early as possible. As I say, it's $5 book. If you can get it earlier. Very interesting topic because we can have a lot of things to talk about under the business law. Okay. I'll try to relate the business law, also same thing to as an entrepreneur. Assuming you are the entrepreneur, you want to start out your own business, and what kind of business law you will need to be aware of. So this is the course usually I offer in fall in September. Another thing I'm going to offer, by the way, we schedule this course is also in the morning, Saturday morning. And on the Sunday afternoon from 3 to 5, I offer another one is entrepreneur. Entrepreneur really means start out your own business. Just assuming you want to open out your business, what kind of thing you need to be aware of. So business law is one of those. So under the entrepreneur, I will teach you how to open out your business step by step. Say for example, what kind of organization you want to choose is related to business law. It's a partnership, sole proprietorship, corporation. If under corporation is a C Corp or S Corp, right? That kind of thing. How to organize, how to file the article. And also another topic is how to raise the money. How much money you need, how to raise the money. How to set out the shareholder agreement or LLC agreement, limit liability company, that kind of thing. All right. So I think I encourage you to plan your course for September. All right. This is it. By the way, we only have 3 classes left, and for next week we will have in classroom midterm quiz. It's 30 minutes, and the format is in writing. All right, we don't do any oral presentation for midterm. I will post 1 questions to you. Right, and you have 30 minutes to answer the questions. Do not just give me the number. Okay, I don't care about the answer. All right, don't just give me the number. All right, I want to see the step-by-step analysis. I want to see you. How did you reach your conclusion? So eventually, really, I don't care about the answer. Okay. The number by itself means nothing to me. Right? I want to see each step by step. So by the time of around 11:30 or 11:25, I will finish my lecture for next week. Okay. Then you start to do your midterm quiz. It is open book, online search, whatever you want. The only thing is you don't do any discussion. The only thing is it's not group. There's no group. Okay. No any communication exchange. You do it by yourself. You can open book, open note, and do the online research, whatever you want. And if that's helpful, okay, you only have 30 minutes. I don't see you have too much time to do the research anyway. So, and the due time is 30 minutes. You have to turn it in. But for some of you, I know for some of you, you cannot attend it. Probably you're gonna on your business trip or whatsoever. You can attend class, then that is your responsibility to contact the office, all right? Before the class, hopefully before the class, you contact class. And again, doesn't matter where you are around the world, your due time is also the same time, is 12 o'clock p.m., okay, noon time, 12 o'clock p.m. and next Saturday, all right? You can turn it in earlier, but again, the due time for everybody, doesn't matter you are in classroom or you are around the world, anywhere, due time is you need to turn it in. So you can turn it in by email or by hard copy whatsoever. All right. All right. This is the midterm quiz, right, for next week. And then in August we won't have 2 left, and the last lecture class scheduled on August 11th, Saturday. All right. Then after that we are done for the semester, and 2 weeks from 11th of August, 2 weeks and the Sunday. Right, so that should be 26th if I'm right. Should be 26th of August, Sunday, by 6 p.m. And all of you need to turn in your final project. And one more time, this is an oral presentation, and you edit it by any method and post it either on the YouTube and any other website, and people can see it. And while you feel really shy and say you want to keep it private, that's fine, but at least keep access to your classmates, so some people can give it a critique or give you the idea. And that is due by August 26th, Sunday, 6 p.m. And regarding the topic of the final project, whatever you choose, whatever related to financial accounting topic, whatever. Again, this is a 15 minutes oral presentation. You can put in as many slides, whatever you think is helpful, slides, exhibit, picture, numbers, whatsoever, music, whatsoever, right? And then just post it by 6 p.m. August 26th, Sunday, and we're done for this semester.
So the final project doesn't have to be video, right?
I hope it is video.
Okay.
Preferably, highly recommend, because it is oral presentation. Without the video, you just give me the audio, it's fine, but it's kind of boring, right? Just want to make it as lively as possible, hopefully. Yes, go ahead.
For the midterm, so you said call the front office and they'll have...
Yeah, I will give the exam probably by Wednesday, no later than this coming Wednesday. So for those of you you're gonna be on the way, just make sure you contact your Yan Zhou. He is our TA. Yeah, contact even after the day, have the break time. During the break time, just go to the office. Say Professor Tong mentioned for the financial accounting midterm, and I will email to him no later than Wednesday, maybe earlier. All right. However, your due time doesn't matter you are in classroom or around the world. Your due time is the same time, 12 o'clock p.m. next Saturday. You need to turn in by either email or hard copy. I expect 1 page will be fine, half page, 1 page will be. But the bottom line is, do not give me the number. Don't just give me the number. All right, I don't care about the number. I want to see each step by step. How would you, do the analysis? All right. Yes, go ahead.
So the final project is going to be 15 minutes.
50 minutes, right. No more homework, because I was told by some of you, you have a lot of burden from another class. So I don't want to add on more burden to you, So for this class, we have no more homework. So we only have 1 midterm, and I have 1 final project. I would rather you produce very high quality final project. If you do the research, some of you done the homework 2 weeks ago. Fantastic, amazing, fantastic. I'm so impressed. So I would rather reduce the amount of the homework, but hopefully you can produce high quality. When I say high quality is you post it on the YouTube, and few years down the road, and some people do the research, you will say, wow, how did you do that? Hopefully you can impress somebody else, not just me, all right? So that's what I mean, high quality. So far, I'm so impressed. All right, to begin with for today, another topic, okay? Let me try to get a refreshment, okay, refresh. Anybody heard about GAAP? What's GAAP stand for? GAAP, generally accepted accounting principle, right? And GAAP usually is a formula or announced by FASB. Try to memorize. Financial Accounting Standard Board. FASB. But again, GAAP usually is used to govern what kind of company? Which company is required to follow? Right, public. So throughout the whole semester, we know the reason why we learn the financial accounting, assuming either you're gonna perform as accounting people, or opposite, you are the user. More likely than not, probably you are the user. You are the user of the financial report, financial accounting report, right? So if you go to online, okay, for each public company, say for example, you go to Google, okay, any public company website, doesn't how fancy it is, okay. Usually on the very bottom, usually it's hidden somewhere, right? You will see the very small icon said public relationship, or say company information. If you keep the icon there, then it will link you to the annual report. You will link you to their annual report. And under the annual report, you will see so many different financial accounting statements. The balance sheet, income statement, cash flow, equity statement, or statement of the ownership. So at least I would say one of the purpose for this class, if you are not accounting people, you are not doing accounting job, but at least in the future you know how to read, how to analyze the financial report. Okay, when you open out the website, when you read the number, and those numbers gonna make sense to you. And of course, assuming those numbers they are real, okay? Because if you watch the news, a lot of financial fraud in the recent year. So financial fraud usually mean those numbers they are not real. They are not real. They are not reliable. They just make up everything, and that's totally beyond this class, right? We're just assuming each number provided by company they are real. They are reliable. So let me ask you another question. If GAAP is adopted by, say, FASB, and GAAP is required for every public company within the United States, how about a private company? What's the relationship between GAAP to private company? Or let me rephrase my questions. If your company is private, what is the motivation for your company to follow a GAAP? But before you answer me, let me give you one hint, okay? In order to follow GAAP, sometimes it's very costly, it's expensive, all right? Because GAAP set out very high standard for the company to follow. I will give you a few examples later on. So I just give you one idea. In order to follow GAAP, sometimes it's kind of costly and expensive. For example, if you want to follow the GAAP, then at least you need to pay the money to CPA and come in to your office to audit your financial statement. And as a private company, it is not required. However, why does private company would like to follow a GAAP? What's the motivation for you? And that is this article about. This article is about, I'm sorry, change it, okay? This article. This article. Proposal will create new accounting standard setter for private companies. This article is very short. Okay, the whole thing is talk about whether or not FASB should adopt a different standard which govern private company. So the whole issue is, number one, private company is not required to follow GAAP. Then I have one question still on the table for you. You can answer me later on. Number two, if you are a private company, what is your motivation? What is your company's motivation to follow a GAAP? And remember, if you follow a GAAP, it's costly, expensive. So this is my question still on the table. Okay, number three is this topic. If private company choose to follow a GAAP, does it make sense to provide different standard to private company from public company? So the third question, the third issue is this topic. Say, if private company elect to follow a GAAP, does it make sense for private company to follow a different standard, not very high standard? As I say in the number one issue, if you want to follow a GAAP, it's very costly. If you fully comply with GAAP standard, it may become very costly for the private company. So the third issue is this topic, talking about whether or not it makes sense for FASB to adopt, okay, to approve different standard. Okay, some people say it's a baby GAAP or mini GAAP. It's a lower standard GAAP which govern private company, if those private company choose to follow out GAAP. So let's go back to number two issue. So let me hear the input from you. If your company is a private company, what will be your motivation? You elect voluntarily to follow a GAAP, even though you know if you follow a GAAP, maybe more costly for your company. So any reason why for the private company? By law, you are not required, but you elect to. What's the major reason?
You want to go public?
Okay, everybody heard that? Maybe your company is in the planning, in the process to go public later on. That is, I believe that's the number one issue.
You want to sell the company to the public other organizations?
Okay.
Sell that. So
Yes, maybe not go public, but you intend to sell to somebody else, right? That's another good strategy, because when we talk about this in the next semester, when we talk about entrepreneur, okay, you start out your own business, and don't be surprised. A lot of people, the reason why for those people to set out to start up their company is to sell. Keep this in your mind. Not necessarily go public, because if you want to go public, you need to comply with, the legal issue. It's very expensive. However, if your plan is to sell to somebody else, is to be merged by the big company, that's not too bad. You heard about this news almost every day, right? The big company, the Google, Yahoo, Cisco, any big company, every day they're looking for the new target. Every day. So you want your company to become the target to be merged. And when we talk about the merge, we talk about couple hundreds millions dollars, $500 million, couple hundreds of millions. Not too bad. It's probably even better than go public, maybe. All right. Yes. So, so just give you one example. If you choose, your final project is why. Just give you a very simple topic. Why does private company elect to follow out GAAP? Then you can talk about 15 minutes. You can talk about, right? And another issue you can think about this is what is the trend of GAAP? It's another very good topic, because GAAP is only within the United States. GAAP is not international, all right? GAAP is only for the United States. It's adopted by FASB, and the FASB is under the SEC. I should not say under. They are related. Okay, GAAP is the guidance related to SEC, Security Exchange Committee, to require those public companies to can follow the same standard to prepare their financial report. All right. So another topic, I can just give you inspiration every week. Right? You can pick out the topic. Say, what is the current trends about the GAAP connect to the international accounting standard. And international accounting standard is a very hot topic right now, right? Because right now a lot of experts are talking about whether or not Americans should adopt international standard, at least provide the option for public company, either they follow a GAAP or they follow an international. So GAAP not become the exclusive, it's not the only one. Okay, so this is another topic you can choose. All right. So this topic is I think it's very interesting. Okay, so the third topic here is if private company elect to choose the GAAP, then whether or not FASB should approve or adopt the last standard for private company to follow. And your answer could be yes or no. You'll have a debate. And this is all this article talking about. And then let me just give you one hint. And the reason why people object, say no, you should not adopt different standard. Because if you adopt different standard, that means you don't have GAAP. That means the private company did not follow a GAAP. And people just say, right? The reason why for private company to follow GAAP is preparing for public in the future. So if you deviate, if you, as a private company, you follow the different standard, and by the time you want to go to public, you may need to go back a few years to redo your accounting report. So it's very interesting. Let me give you one example. Okay. Why GAAP is so important? Why? How come the standard is so important? We're gonna talk about the sales for today. Okay, for today we have one topic about sales. We did not talk about sales in the past 2 weeks, but we're gonna explore. Okay, when we talk about sales, we'll talk about inventory. We have not touched inventory yet, but we'll talk about inventory. When we talk about inventory, we'll talk about the FIFO, LIFO, all right, or weighted. So we're gonna see what happened. But let me just give you one example. When we talk about the sales, sounds very easy, right? Sales, everybody understand what sales should be. Let me give you one example. As a farmer, okay. Say this farmer just vegetable, apple, just give it as an apple, right? And in the agriculture business, the farmer, they don't just plant it and then wait for the harvest. This is not a business. Okay, for every agriculture business owner, they sign off the long-term sales agreement to the vendor, to the whatsoever, to the merchant or warehouse long time ago. Say for example, farmer A planted apple and sold to Costco directly. Just give you one example. All right. The farmer, they don't wait for the harvest and then sell to Costco. That is not their business model. All right. It's opposite. The farmer sign off the long-term sales agreement with Costco already. The sales agreement has been there already, 10 years, 20 years. So on the agreement, it specifies on certain day, the farmer must deliver the apple to the warehouse of Costco. Then by the turn, on certain day, Costco will pay to the farmer. All right? So here comes the issue. When is the sales day? Sales day is the day sign of the agreement. Agreement specify, say, let me give you more detail. Say, agreement signed today, July 14, 2012. However, delivery day is next year, say February 1st, 2013, delivery day. And the payment day, say 60 days, okay. April 5th, 2013. So we have 3 days here. We have 3 different days here. If, assuming there is no any law prohibit, there is no any standard, no any GAAP to prohibit. As a farmer, you are the farmer, okay? Which day you would like to enter into as a sales day?
The date when goods and services are delivered.
Okay, so you want to pick out February 1st, 2013, right? But as I say, if there's no any law regulate, and you're pretty sure you will deliver on time, and you are also pretty sure you can collect money on time, everything is almost for sure, and you know Costco will not default the agreement, and you are the farmers, you want to make your financial report looks very beautiful, very attractive, and you can turn around and use this income statement to borrow more money from the bank. Which day you want to pick?
July 14.
Yeah, you want to pick up as early as possible. July 14 today. And you say, what? What are you talking about? Today is only the day you just sign off the agreement. And you have not even planted the apple seeds yet. Not yet. And you're talking about revenue? Well, if you think this is too crazy, but if you want to apply this example to every public company, they will do almost the same thing. Right? Remember a few weeks ago we talked about the sales. Some companies are very aggressive. On the same day they receive the purchase order. Of course, you know, for the industry, usually delivery time is not that long. Agriculture, you need to wait for the harvest. But for the manufacturing, if they can deliver, you know, in 30 days, 60 days, and this kind of practice will not surprise you, right? When we talk about agriculture, it may surprise you because, you know, on the date July 14, 2012, the day you sign off the agreement, farmer has not even planned yet. So this surprises you. But if we apply the similar case to the industry, it may become very standard, right? So that's the reason why, you know, different people, different industry may pick a different day. That's the one reason why GAAP will need to set up the standard. And let me give you another example, very bizarre example. I believe we all agree, okay? If your company borrow money, you borrow $1 million cash from the bank. Okay, let's give everybody do this. On certain day, your company borrow $1 million cash from the bank. So your cash account increased by $1 million, right? So right now, I believe at this moment, everybody know, right? On your accounting, you should do what? Cash account, do what? Increase mean everybody debit side, right? No problem. And what's the other account you want to pick? Which one? Yeah, more specific.
Notes.
Yeah, note payable, something like that, or debt payable was like that, right? And according to the term, your company need to pay interest And by the maturity, I don't know, 1 year, 2 years, 3 years, 5 years, and we will have one chapter talk about that. Okay, you pay back everything. So no any issue yet. If we understand this is debt, this is the money you borrow, you never think about revenue. That's settled. However, there's another very bizarre, very strange thing. It's called sales and leaseback. Probably not heard about it before, but for those people, if they took my real estate class before, it's kind of very standard. Okay, what's the sales and leaseback? On the format, it's like the owner, say the owner of this building, own this building, also operate the school here. All right, but on certain day, the owner need cash, need working capital, need to raise $1 million. Instead of borrow the money, instead of use this building as mortgage, instead of the owner sell this building to one investor, not necessarily the bank, to any investor, and the investor put in the money $1 million cash, and the title change. The title of the building changed to that buyer. However, there's another agreement say, I will lease back. Even though I sold the building to you, even though the title changed, I'm not no more the owner of the building. However, one condition of the sales is I will lease back for a period, say for example 5 years. So you can see, number one, there's a sales agreement. I sold the building to the buyer. However, number two, in the meantime, I will lease the building back from the buyer. That really means the buyer never occupy the building. And according to the number two lease agreement, I will pay the monthly rent to the buyer, mean new owner. And by the time 5 years expire, according to the lease agreement, I have option to buy it back. And the number could be as a formula. Say I buy it back as 800,000, 700,000, or even higher. Or as a formula, we use $1 million as a base, and to time the CPI, Consumer Product Index. So you see, the whole thing, it looked like sales. I sold the property, I get the money in. However, in reality, it's not sales. Everybody understand? In reality, it's the same thing. You borrow money. You borrow $1 million cash. You pay back the interest as rent. And by the year of 5 years, this maturity, you either pay back the loan amount, $1 million, or you lose your property, you just move out. So the questions come here. If your company sold the building and get the money, $1 million, by the time you receive this $1 million, is this really the sales or you borrowed money? It becomes the questions, right? As sales, as a seller, you don't have a right answer. We don't have absolutely right answer which way is more benefit for you. Because if you want to impress your shareholder, you want to report as a sales. Understand? If you want to impress your shareholder in the same year, you would like to report it as a sales, because this $1 million will increase your sales and hopefully increase your profit. That is one way to impress your shareholder in that year. However, the opposite, if you report as sales, you may recognize capital gain then you may need to pay for capital gain income tax. So, accounting by itself, there's no absolute right answer, right? So that's why I say for your homework, for your midterm, I don't care about the number. I don't care about say, oh, my company reported 500,000 gain. I don't care about that. You need to give me the analysis. And if your company choose this way, what's the reason why? Choose the other way, what's the reason why? All right. So just give you one example. In reality, a lot of gray area. When I say gray area, I mean either way is correct. Either way is legal. Either way is you can just go that way. Your choice. But the thing is, you need to provide the reason why, which way is benefit. All right. So let's go back to today's topic. So remember, okay, your company started out, you raised the money already. Okay, we gone through that step. But right now we want to talk about the sales. We did not touch about the sales. So for example, on a certain day, we followed the example from last week, last session. On a certain day, your company received a purchase order. Assuming your company choose to report it as a sales. All right, we just simplified everything. By the time your company received the purchase order, your company regularly report it as sales. All right, so let's see what happened. Okay, on a certain day, your company made sales and $1,000, and assuming right now it's critical sales. You are a retailer. It's critical sales. $1,000 critical sales. How did you report the sales? How about let's make the assumption, okay? For every critical sales, your company will not receive the cash for 3 days. So that really mean, for critical company, they will process the thing. So after 3 days, you will receive cash, but we will discuss the cash because when your company process through credit card, you don't receive 100%, right? Because credit card company, they're gonna charge certain percentage. Let's leave it there alone. On this sales day, $1,000 sales, it is on the credit card, and you don't receive the cash for 3 days. So how would you report this transaction? Any idea? So no cash. So don't touch cash. Account receivable by 1,000 on which side?
Increase.
Account receivable is assets, right? No problem. So assets is debit side. How about the other one? Revenue, everybody. So far we have not touched revenue yet, but yes, today we're gonna touch the revenue. Okay, so the other account is revenue. So revenue over there, when revenue increase is the same size as equity, because revenue finally will go to equity. So revenue is the same size as equity. So we know $1,000 on the credit side. So far it's okay, no problem. All right. We will talk about the cost later on. So far we just leave it alone. Because remember this, okay? Every time when you involve sales, usually it's either cash or account receivable. And the other is revenue, usually. So cash, account receivable, usually linked to revenue. There's no problem. But always remember, you need to resolve the inventory issue. Because when you sell something, your inventory reduce, right? We're gonna see that later on. But right now, at this moment, let's just focus here. Okay? Account receivable on the debit side, 1,000. Revenue same thing, 1,000 on the credit side. However, here's the problem. Okay, here's the new issue. Okay, 3 days after, credit card company released the money to your account, to your company, but they charge $30. So you only receive 970 cash. So on the day your company received the fund from credit company, how are you gonna do?
Credit account receivable and then debit.
Slowly, because I want everybody at least at the same pace. I will recommend you touch the cash account first. How about you do the cash account first?
Cash increase.
Yeah, cash increased, debit side 970.
Excuse.
So far so good. How about the other account?
AR increase. Accounts receivable decrease.
Account receivable decrease by same amount.
Then bank
But
fee.
right now we have a discrepancy.
Then bank fee. Cash decrease.
Slowly, okay. Because right now here is critical, okay. The easy part is cash 970. This is easy. And then by the same amount for the account receivable. But stop here. Do not jump, okay. Here is critical. Because account receivable it was 1,000. So if we credit 970, you will see $30 discrepancies always been there, and that causes trouble. We need to handle this $30. We need to make sure by the time your company receive 970, the total 1,000 account receivable being wiped out. Otherwise, the $30 will always be there. Then it is a problem. So let's stop here for a while. How can you handle this $30? Because we know by the end of the day, account receivable should be credited by $1,000 total.
You'd have like an expense account.
Yeah, this kind of idea, we talk about that. Whether or not it is, yes, we'll think about that. Okay, we'll think about that. Yeah, the basic idea is your company incur $30 expense. And that is one way to wipe out the total $1,000 account receivable. So let's go step by step, okay? Because we need to be very careful here, okay? So we have our cash here. We receive 970. We have account receivable. It was 1,000. And we know we need to credit 1,000 in order to make this account balance become zero. We know this is the goal. However, how do we handle the $30 discrepancy in there? Any idea? Even there's so many ways to do that, as long as we make it, make the whole thing sense. Any idea?
Expense plus